We are receiving again on Connected Farmer Ben Buckner from AgResource. He's based in London, and he's going to talk about the same US carryover and very high production in South America. On Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So Ben, how are you today? So that those numbers haven't surprised you?
They did and they didn't. You know, it is still very early, and especially this year, harvest is so delayed in Brazil and will be in Argentina that we don't have any real data to go on. So in that sense, I think it was logical to not make any changes despite some unusual weather. And if you don't change South American production, you really can't change the global trade matrix all that much, specifically U.S. exports. And so in that regard, it was viewed as a disappointment to the bulls, which is very clear in today's project.
But do you think that it's very likely that in the coming weeks, some consultancies or private companies would reduce the South American output?
We tend to think so. So far, it seems as like the private companies have been raising South American crop estimates. We tend to be more on the opposite end of that, but yield data is important. To us, it's most concerning is really the yield so far that we have seen or heard in central Brazil and even big producing states like Mato Grosso and Paraná.
And considering the market reaction after the report, what are you seeing for the coming days and weeks?
I think mostly it's going to be very volatile. That's what we're seeing now. And this is probably still just a symptom of this larger bull market is really trade the USDA's balance sheets. And so, you know, the recent break yesterday and today makes sense because fair value is aligned with the USDA stocks and stocks to use. And so the game moving forward is predicting, as always, changes in the USDA's balance sheets. And for the next couple of months, that really will be a function of South American crop sizes. And so today you kind of have to make your bet whether you think that Brazil soybean crop will be higher or lower in the April USDA report. And so again, we think it will be lower, but that is, you know, it's all very speculative at this point, and that's going to give us these very, very big ranges in all the markets. And so that can be expected. This is not unusual, but you know, if a Brazilian crop of 135 million tons is bearish soybeans, and a crop under 130 is probably very bullish, and we will have most likely, you know, 75 cent to $1 moves in both directions over the next 6.
And are you seeing any transportation problems ahead for the U.S.?
Very small ones. I think weather is certainly not conducive to a normal flow. It's been very, very cold just now, really for the first time all winter. It's going to stay that way for 10 days. And so it's a lot of snow, very cold temperatures. For trucking already poses some problems. But we are also seeing some of the riverways starting to freeze, and so they are being cut down. And also, unlike recent years, this is occurring when the U.S.'s export loading program is record large. So any delays will have an outsized impact on cash.
Well, from the end of the U.S. election, the market has talked a lot about the US dollar, but the US dollar is still high right now. What can you say from Europe, giving your perspective about the dollar?
Yeah, I think it's found a pretty fair price, and it hasn't moved all that much in the last couple of weeks. And that makes sense. I think the rest of the year will be defined by who has the ability, whether it's Europe or the US, to start to raise interest rates. And so who sees inflation first and will it be healthy enough that we can start to boost up interest rates in the US and the dollar wins, or if it's Europe, then the euro wins. And so that's really undetermined now, though it does seem like the US might be favored because of regional anytime soon in Europe, particularly not in the UK. There's a lot of news out today that even travel within the United Kingdom will be restricted for the rest of the calendar year. And so that makes perfect sense from public health, but in terms strictly economics, I think the U.S. will probably start to get back closer to normal sooner than a lot of other countries in South America or Europe. And so that's going to favor.
Yes, and in that sense, how does that impact commodities?
We think that the currency relationships are mostly, or have the greatest impact on supply. So it doesn't really change flows all that much. I guess a higher dollar would probably reduce some capital inflows into the ag markets, but really, we go back to where we were a couple of years ago, or now in the case of Argentina, where weaker currencies in Brazil or Russia or Argentina does increase margins for farmers in those countries. And so that if that goes back to normal, the dollar rallies 5 or 7%, then I think that returns really strong profitability, and you'll see more and more acres planted, more investment, and so that will offset some of the record demand that we've seen. So it is bearish. A higher dollar is bearish ag commodities, but it's kind of a long-term issue and based on the following year's production or seeded acres.
Ben Buckner from the AgResource company. Thank you.
Thank you, Luis.